Assalamu alaikum Habibis. My name is Shin and I run an investment company here in the Middle East. Today I wanted to talk to you about the market and fear. The first thing I can tell you, well, it's nothing, not nothing. But we'll get into that later. When volatility hits the market, the average investor questions what to do at this point. The most important thing to do is to not pull out of the market. And why is that? Because as we discussed before, this will be an emotional decision and you do not want to give in to the emotions nor the fear. Remember this graph? Don't give in to fear. It is the wrong approach to have in anything in life. Think about it this way. If you own a house you're living in, you don't check every day what the housing market is doing. You have a place to live in, happily with your family in the long term. The value of the international stock market will always trend up. From an investment point of view, the best rate of return comes from the worst period in the market. In the short run, you cannot predict what the stock market will do. And frankly, no one can do that. But historically, right after the market stops going down, you see a quick bounce back, fast and swift. If you miss that opportunity, if you miss that out, then you'll really miss out what could be a pretty nice return in the long term. The only thing that can hurt your return in the long term is yourself, your emotions, and your fear. And you need to stick to your plan and stay throughout the course. The right approach to take is to always consider yourself as a buyer in the stock market and go even more aggressively when the stocks are down. So remember, my friends, when stocks are down, it's actually great news. The best investor in the world, Warren Buffett, said the exactly same thing. Just like when you have sales in your favorite store. I don't know about you, but that's when I go shopping. If you have any questions, interests, or topics to learn more about, please email us here. That's your Sarwa Scoop.